Well, SBI is in focus today on the back of some more brokerage cheer. We say more brokerage cheer because just recently we had the third follow-on CLSA report with a hike target of well above 320 rupees. The initial note from CLSA was 5 reasons to buy. They then reiterated on that note with a higher target, and now they have an even higher target. So over the weekend, I believe Goldman Sachs conducted a meet with the SBI management, and now they're quite bullish on the stock as well, and they've actually put out a note in which they've cited various reasons why they believe SBI is still pegged to perform better than some of the private banks. It is definitely the leader among the PSUs and still offers tremendous upside potential. So the first thing that the Goldman Sachs note flagged off about SBI is that it still trades at 0.4x or 0.5x FY22 price to book value. So that's just extremely cheap, right? And let's remember, they have a whole host of extremely valuable subsidiaries that no one's even factoring in right now. We're looking at the core banking business, and it just offers a very deep discount to its larger private peers. Now, why do they still like it? Because PSU banks haven't performed for a while, and there is also an argument that states there are good reasons why PSU banks trade at significantly lower price to book multiples. Well, in the case of SBI, Goldman feels that doesn't really apply because A, the asset quality situation is far better than was initially expected, and in fact, it's even surprising. They think that credit cost may be 2% this year, but then next year onwards, it's going to come down to 1.8%. Restructuring required within the total loan book is also very low. Against all the stressed assets, SBI has a PCR of around 60% versus some of its private peers that just have a 50% PCR on the stressed pool. Also, they've already taken 71 billion rupees of aggressive provisioning against the potential COVID impact. So if you take all these factors into consideration, it becomes quite apparent and evident that asset quality is not going to be as big an issue for SBI as many people might have perceived early on. This was also hinted at when SBI had very low moratorium numbers from the get-go. So brokerages now also like the fact that the capital adequacy at SBI is more than sufficient. There's going to be no equity raise for SBI. It's simply not required. They could divest some smaller stakes in subsidiaries if they need cash, but that doesn't seem to be the case right now. Your regular bond issues, debt issues, those might continue as planned, but there'll be no equity raise over here. So these are broadly the reasons why these brokerages are so bullish. But what's interesting is the target prices, right? So Goldman, in a base case, implies a 31% upside from here in this latest note. If you take the bull case, you're looking at 51% upside for SBI and potentially targets about 367 rupees. So keep your eye out on this one. While banking stocks and particularly PSU banking stocks are under a bout of pressure today, it may just outperform in the near to medium term.